We are toast in this market, and at the end of the video, I'm going to prove it to you. My name is D7 here at Grok Trade, and this is the weekend edition video. All right, we end the day Friday on a bullish note. Everybody in the green after a big sell-off early. We rallied back with the Russell 2000 up 1.6%. But financials, the only thing lagging the markets. Guys, that's bad news. Bad news. US dollar higher, silver higher by nearly 5%. And watch my last video. I showed some exuberance on financials, or I'm sorry, metals. Metals, gold is higher, and VIX down 2%. And we're at 31, right at 32. All right, let's take a look here at the markets as a whole. Is moving forward here quickly. The S&P 500 ETF exchange traded fund continues in this big bear flag. However, guys, last 2 weeks we've just been going sideways. You'll notice that we've been here between 270. The trading range has been between 270, 272, 273 area, up to about 295 area. So that has been a trading range the last few weeks. We're just chopping sideways, up and down, up and down, up and down, up and down. But it doesn't take us out of the bear flag. The bear flag is this big pull down, wavy flag up, staying below the 61.8 Fibonacci retracement. So we're still there. Even though the last 2 days we bounced, we're bouncing. Friday we bounced higher, but on decreasing volume. Guys, the volume has been the most on the decreasing candlesticks. The up candlesticks, is nice size volume, but it's decreasing. It's decelerating as it's going up higher. This area, this trend line that you see here, support, was broken right here on May the 12th. And then we broke down. We're doing this little bounce. I think that we could even bounce higher Monday, Tuesday, hitting our head at this resistance point and then dropping. I could see that happening. Look for early bullish activity. However, I think it will be short-lived looking at the technicals themselves, but we're caught up between the 50-day moving average as support, 20-day moving average here kind of fighting as resistance. We're caught up in the moving averages. Anytime that happens, look for a lot of activity going up and down. Happens, it's all over the place. So for you guys, don't get hung up on these little 1 day, 2 day pop hires and get all excited because you're uber bulls. And for you that are see these 1 or 2 day down days, don't get overexcited if you're uber bears. You can't be biased in the markets, bullish or bearish, especially when we're in a trading range, which we are now. Trading range, we're between those two areas. So it's when we break out of the range to the upside, bullish. If we break down below the trading range to the downside, bearish. That's what we're looking for. Right now, on the bigger picture, we're far more bearish than we are bullish. Here, let's look at the MACD centered oscillator down here at the bottom. If you look at this down here, you'll notice that we're going higher here, we're going lower here. That is called a bearish divergence. Look up bearish divergence. And we have that on the MACD centered oscillator. And also we have a shoulder, head, and shoulder. Do you see this? Shoulder, head, shoulder. Shoulder, head, and shoulder. That's a trend reversal. Shoulder, head, and shoulder. Only when the neckline is broken, it was broken back here on May 12th, okay? So this is confirmed. These two updates, don't get excited about those bulls because you'll have your heads handed to you more than likely. Okay, just keep that in mind. Now, it doesn't mean we can't just rocket to the moon. If all of a sudden the economy bounces back and there's all this magic happens, this thing could go to the moon and we're out of the woodwork. This is a bear flag until it's not. It's a bear flag until it's not. Bear flags are bearish. We could have a significant pull down in the markets. At the end of the video, I'm going to be sharing something with you that's far different than anything you have seen on the interweb, okay? You want to stay until the end of the video, for sure. Okay, there's the technicals. A quick look here at the weekly. If I go over here to the weekly, let's make this big. I'm using TradingView. There's the link down below in the description if you want to know what chart I'm using here. TradingView, I love it, It's a great chart. And it is an affiliate link. You know, I make my $3 if you use it. It doesn't increase your fees at all. So check this out. We're down, bear pullback right to the 61.8. We have an outside trading range candlestick that we went higher than last week. We went lower than last week. It's a hammer. It's a hanging man. Anytime that's at the high of a leg, and we're at a high of a leg, hanging man, that's what we have here. And we got the declining 20-week moving average acting as resistance. If we start to get slippery, that could be bad. So, or this could be building a high base. This high base could get bullish and go boom to the upside, breaking through this 20-day moving average. If it breaks through that and we get a nice close to the end of the week, we could get really bullish in the markets, okay? That could happen. Anything can happen in the markets. Always remember that. Okay, let's go back to the dailies. Look here at the dailies. Here's the daily on the Dow 30. It looks very much like the S&P 500. The NASDAQ, very interesting. We went higher. Last couple of days going up. Let's just see what happens. We're above most moving averages at this point, which is good. The Russell 2000, if you look here, it already broke down. It broke down here on May 12th. A little dead cat bounce. This is a head and shoulder trend reversal pattern. It broke down, and the neckline was broken. Yep, but actually at that gap, broke it. So we're decreasing on volume on these days, on the up days. Okay, so that's just not great. Financials, if you look here, we've been breaking down. This was a double top trend reversal pattern. Double top has broken down. Low base did break down. We're below all major moving averages. We're not caught up in the moving averages. There's relative weakness here, guys. And Friday's pitiful looking candlestick just is not overly exciting. I think the financials look really weak. US dollar is chewing its way higher. So that's interesting. We're above moving averages here. That's going to put, if we keep getting a stronger dollar, it's going to put weight on gold, silver. It's going to put weight on the stocks as a whole. But silver is up. Remember how I said I was pretty excited. You guys were noticing that my excitement for precious metals. And then boom, I don't think I moved the market, okay? Little old D7 here. It doesn't move the market. But big volume, nice run. That gap could fill. Look for a pullback if we do get it. More buying opportunity. I hope you guys actually shared the video when I talked about that. I hope you guys share the video. I hope that. But gold's here. I look for more upside there. It's a nice high area. It's just catching its breath here. Could chop around a little bit, but I could see another movement to the upside. VIX. It popped up. Here's a little pullback. I do see that going higher. Okay, let's look at some tech stocks. Now listen, before I get into the tech stocks, I have to say this, a disclaimer fully. I'm an educator, not a financial advisor. Okay, let that sink in. But I've been trading 22 years in the live markets. I trade the markets. A trader first, educator second. That's who I am. I have over 900 students that I have mentored. We are a mentor company, 900 students. And I'm a former institutional trader, okay? I've been published. I've got a stock trading club that's over 500 in membership. So I'm just putting in perspective on who I am, okay? But I'm getting ready to look at a lot of charts, and I'm going to be saying buy or sell. That is not a recommendation, educational purposes only, and you have to make the assumption I either own them or I don't. I could very well own them in my portfolio, okay? You have to make that assumption. Fair enough? If we're on the same page, I'm going to be running through these, and you can make your own judgment if you like what we do or not, okay? Let's start off here with Apple. Apple was a big run up. We had a rising wedge. We broke that rising wedge on Friday. We hit our head here. Apple is not a buy. Apple is take profit soon because we could start to see some bearish activity soon. There, AMD, if you look at that, I like AMD. AMD is a big bull pennant. Look for upside opportunity on there. Amazon, look for more upside opportunity. Really nice area. The only thing I don't like about this is this base. It goes sideways. And then we have this dip in the middle and come up. That could be really bearish, guys. almost look at it as an M. If we start to show weakness, especially when we get below 2,300 on Amazon, you want to short the puddings out of Amazon until we get to this support line. That support line is 2,200, but that could get bearish. However, anything over 2,500 start to go long, looking good. Baba is a big symmetrical triangle. Long Baba to the upside, short it to the downside. Baidu, even though we had a couple good runs, we got earnings coming out on the 18th. Stay away from that. Let's see what earnings does on Baidu. Booking is in a lot of trouble. Look for a little upside opportunity, but then it will start to drop. Cisco is at resistance. Sell that. Catfish, I call it catfish. It's Cognizant Technologies. I call it catfish because it's what it looks like to me, and I love fish. Fried catfish. But anyway, we're down. Look for it to pop up a bit, but look for it to drop. That is a beautiful double top M for murder. This is double top trend reversal. It did drop. Look for what's called a bear pullback for a selling opportunity to the downside. eBay. If you look here, eBay is a buy. Look for that to go higher. Really looks good there. Facebook is going to rally back up, hit its head at resistance, sell Facebook at that point. Google is running up. It's going to pop up, but we're at resistance areas. Look to take profits. Google with an L, same thing. Look to take profits as it goes higher here. Whoa! GoPro broke a major resistance area. If we can get above the 50-day moving average, or what? Oh, I've got those turned off there. That's the 200-day moving average that's acting resistance. If we can get a close above that, GoPro is a buy. GoPro is looking solid, guys. Microsoft is chewing itself higher. Get ready to take profits there. We're coming up to a resistance point on there. MU. And stay away from that one. It's caught up in moving averages, moving sideways. No one knows what's going on. Netflix is making new highs, guys. This is nice to see. If we continue to do that, we can continue to move higher. As long as we stay above the these moving averages, you can stay long Netflix. Nvidia, wow. Fantastic pop, looking rock solid. We have earnings coming up on the 21st. Don't hold over earnings, but this is solid move. That is a long. Go long on Oracle. Go long on PayPal. That's a high base, looking rock solid, guys. Roku is down. Stay away from that one. This could be a short soon. Shopify could be a high base. That could be if we go higher here. It needs to stay above the moving averages. If it doesn't, sell that as soon as it shows any weakness below that. Snap, stay away from that one. I think this is going to fall apart. It's toppy. And Tesla, it's hard to say sell on Tesla, but I don't like the formation that we're getting on this one. Just be careful with this one, especially if we go below the 20-day moving average. That could be bad. Twitter is chopping, going sideways. Just stay away from it. There's nothing there. There's no trade opportunities there. Anything, it broke a trend line. Actually, it could be a short. This could be a short under $28 on Twitter. Okay, there it is. Not even monologue time. I'm teaching you guys something here. Okay, if you stay until the end, I promise you I'd be showing something to you. And the markets are significantly overvalued. Markets are quite overvalued due to the Fed's false sense of economy coming back to normal soon. Mega caps are grossly overvalued. It's expected to be 2001 again, talking about the technology bubble, pop in techs and biotechs. That did drop around 80%. We could be seeing that and setting up for that. Did you guys know the NASDAQ is now the bigger than the entire world's market cap? Isn't that insane? The world GDP collapsed worse than the Depression times in 2007. That's crazy. It's expected to take 5 years to bounce back to where we were. In a single month, we lost 30 million jobs in the whole U.S. alone. Globally, it was around 200 million jobs. So there's some facts for you, but I want to share something with you about valuation. We're talking about overvalued. Back in 2000, I was there were two camps. Keep buying tech stocks in 2000. Buying because we're going to the moon. Everything is looking grand. There's another group, and I was part of this other group that said, absolutely not. We're grossly overvalued. This is a bubble. We will, in fact, pop. Why did we say that? It's because we understood valuations, and I'm going to show you valuations, and you can take great notes here, okay? You can take great notes here. I'm going to a site called FinViz, Financial Valuation, Financial Visualization is what it stands for. But FinViz here, FinViz is, I have an elite account with these guys. But what I'm going to do is this one. I'm going to share something with you called a PEG ratio. Come on, reload. Reload. Did I lose internet? Of course. Very timely. Very timely in my video, I lose internet. Did I lose the internet? I'm going to have to pause this. Internet came back. All right, here's FinViz. Sorry about that, guys. To you, it was just a flicker of time, so no big deal. All right, here's what we're going to be looking at, okay? I'm going to look at big FAANG stocks. Let's put in FAANG, F for Facebook, FB. Okay, this is what I'm looking at. If you, in FinViz, you go to there.com, put in Facebook, you scroll down, you're going to be looking at right here, PEG ratio. Do you see the PEG ratio? PEG ratio is price to earnings over growth, okay? They say price to earnings to growth. It's over growth. You divide it into it. It's usually a 5-year growth. Anyway, it's your price to earnings and expected growth going into the future. Okay, here this is basically valuation. Look at the PEG ratio at 1 is fair market value. Okay, PEG ratio, if it's a 1, it's fair market value. The higher you go, the more overvalued you are. Okay, that's how you look at it. We are. If you look here, Facebook is overvalued. We're at 1.85. It's not in the red zone yet, but this is called overvalued. Anything over 1.5, 1.6 is not great for us because you're buying something at a price more than what it deserves to be at, okay? Are we all on the same page? I hope that we are. So let's go to the next stock. Let's, on FAANG, would be Apple. If you look at FAANG Apple, where PEG is at 2.10, that is grossly overvalued. That's bad news. It's in the red zone. Amazon for FAANG, there's 2 A's in FAANG, is 3.4 PEG ratio. 3.4 PEG ratio. That's horrible. Horrible. Not good at all. Bad news. Netflix is part of FAANG. PEG ratio 2.7, red zone. Bad news. It's horrible. Google. Alphabet. PEG ratio 3.6, grossly overvalued. Horrible. All the FAANG stocks overvalued. Bad news. Well, you know what? Let's do something fun. Let's go to just some Dow 30 big dog stocks. Let's go over here. I'm going to go. You can save your own stocks here. So I'm going to go to the Dow 30, okay? Dow 30, Amazon, Boeing, Caterpillar, Cisco, Disney, GE. Okay, this would be fun. Fun city. Let's do it. Let's go and look at Disney. A lot of us trade Disney. Go there. Are you kidding me? That is unbelievable. 84. Disney, grossly overvalued. Oh, what's McDonald's doing? What's McDonald's doing? Are you 6.77? Guys, this is a train wreck. A train wreck. This is horrible. Nasty sauce. I mean, it's bad, bad stuff. What was Cisco? PEG ratio 2.6. What were some others here? CVX, Goldman Sachs. Let's look at that. 8 peg ratio. Wow. Wow. Wow, 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 wow. Yeah, let's do Goldman Sachs, Home Depot, GS. Peg ratio, 1.7. Overvalued, not in red zone. HD. 3.22. Everybody's overvalued. I could sit and do this. You can do it on your own. Go do it on your own. Everybody's highly overvalued. Guys, that means we're all on bubbles. This is bubble city. Bubble, bubble, bubble city. This is exactly what we saw in 2000 before the technology bubble popped. The other thing is this. Analysts are anticipating that 15% of all those people who have mortgages are going to default, that we're on a housing bubble. I'm not into real estate, but a lot of our mentor students that come through are real estate investors. The reason the real estate investors come, can you guess why they come and learn trading? It's because there's times when real estate, you need to find other ways to make money outside of real estate. And you have to wait for the down draw before you can start buying real estate again, right? You got to wait for it. If it's a 5-year pullback, we got a long time, folks, a long time to wait. But trading, we can learn to make money when the market goes down, 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 down. A lot of money to be made to the downside. And sometimes we have to be really patient for that. Really, really, really patient. And so it's okay to be patient. We have to be patient. And you guys, just be careful. I said this earlier. Be careful. Don't be so quick to be bearish. Don't be so quick to be bullish. Or no, that's not that. You have to be quick to be bullish and bearish on the technicals when they break down or break out. Okay, you have to be nimble and ready to rock and roll. Take advantage of those swings when they're in and out. You have to know how to recognize that and take advantage of it when they do. But when it comes to being biased because you have certain trades on, that's a weakness. That's an amateur weakness. If you're a perma bull or perma bear, well, shame on you, because that shows your weakness. Because when it goes against, that means you're going to be victimized if it goes against you. There's a 100% chance you'll be victimized because you're permanently bull, permanently bear. You're permanently one or the other. Because of that, you will be victimized. It's far more intelligent and savvy for us to exploit and take advantage of all the directions, up and or down. That's what we do. I learned in my 22 years as an active trader using technical analysis, it is by far better to fundamentally pick your companies and trade them technically. If you can do that, woo, that's a cat's meow. I mean, that's where it's at. My trading has never been the same since I had that realization. So I got 2 mentors, one in fundamental analysis and one in technical analysis. Those 2 mentors helped me be where I'm at today as a trader. So very cool. But man, there's just a ton of money out there to be made. All right, I'm just talking. I'm just talking. We do mentor. The next class we're going to be doing next month, just know it's usually the 3rd weekend of each month, and we only do 3 days. We only train and teach 3 days out of the month. Okay, 10%. That's all we do. We're traders first, educators second. We take 10% of our month and say, let's give back, let's teach, and that's what we do. The next one is for more advanced people. This one, it will be for people that's been trading, at least over 6 months. But I'd like to see you've been trading 3 years or more. It's going to be geared not for the beginners next time. Now, beginners will get a lot out of it, but you'll have to retake it again, right, a couple times. And so just keep that in mind. If you come in, you can do that. You can also come in and one student, you can bring a second person with you, okay? So that's helpful. Just keep that in mind. All right, that's it. Just go to the Grok Trade, click on Mentorship tab, and you can fill out the form and get down the path to learn more about that. All right, that's it. So you guys are great. I really appreciate your comments. I didn't get to respond to you guys or put my little hearts on the last one. My mom was in town. Man, my kids, I got 2 girls and my wife. It was just great spending time with my mom because she lives in New Orleans area down in Louisiana. I'm all Cajun, man. We got all of our Cajun family down there. And my girls they love their grandmother. They love the grandma. So that's it. Take care, guys. We'll talk to you later. Love you all. Bye.